With the latest downside action in Dash, we have ourselves quite a setup to get that lower low that we were dreading earlier. And Dash is not the only coin showing this. As a matter of fact, we're seeing the same setup across the entire crypto space. And because we've been seeing quite a few correlations between the coins and equities, we're seeing similar action in the S&P 500 and the Dow as well, which we'll touch on here and there just for reference. But this is the 1 hour chart in Dash. And we still had our 3-wave rally structure in place, but we've pulled back so far that it's honestly probably a little too low to be a 4th wave down in a leading diagonal, especially when you look at the size of this thing, the depth. It's getting less and less likely. I'm going to call the breaking point probably, probably somewhere between below $87. Looking at this structure up close, again, we have our 1, 2, 3, which can easily be interpreted as an A, B, and a C wave up. And the downside structure could easily be considered a 1-2. While not as clear in Dash, many of the other coins are showing this, but we could call this maybe even a leading diagonal to get a start, maybe a 1, 2, 3, 4, 5. That could be our 5 down to get this started. Leading diagonal structure with a very shallow second wave bounce, which is unconventional, but we see this kind of thing in altcoins in the cryptos quite often. So we didn't quite make it to our ideal bounce point, but many other coins did, such as EOS, and we'll touch on that in a second. I think Ethereum did. There's a few others. So right now we're looking for that lower low to hit. While I am starting to lean a bit more bearish, the green and orange bullish patterns have not yet invalidated. Those do not officially invalidate until we break 77.28, which is the thick red line right here. So here's the thing. If we do swing back and save this rally structure, we get that higher high and we break 138.36. That would immediately kill the downside structure. There would no longer be this red pattern at all. So that could happen. I'm not going to rule it out, although we're not seeing much sign of that yet. MACD does show a bit of a divergence going on here. Otherwise, it shouldn't be too ambiguous what happens next, because if we really are in the 3rd wave down of a larger C wave, well, the 3rd wave is the strongest and steepest of your waves. So we should simultaneously fall down a cliff and break support in one fell swoop. Should happen very quickly. So personally, I have been warning people, if you guys are less risk tolerant, it probably would have been a good idea to unload some of your coins. I would always recommend against panic selling. So I wouldn't recommend selling everything unless you're going to use that money to buy a car or put a down payment on a house or something, which you probably shouldn't be putting in cryptos anyway. But I have taken half my positions off the table with the intention of buying back in if and when we get this lower low. If that doesn't happen, if we get this 5th wave higher, I would hold until we get our larger degree 2nd wave down. That would be the perfect dip buying opportunity before we launch in more of a 3rd wave kind of thing. So while this is Dash, we're seeing similar, but not exactly the same action Bitcoin and some of the other coins. So Bitcoin, it does have much more of a legitimate looking 1-2. So you have a wave 1 down and a wave 2 up. This ABC here is dead, so I'm going to delete that. So once again, 5-wave structure down, 2nd wave up, and we are in the midst of a 3rd wave. It almost looks like a 1 and a 2 with a nested 1-2 in place, maybe another nested 1-2. And the next step should be a very steep drop right through our supports. For Bitcoin, it's 34,332. That's what we need to break to put us officially in the red patterned camp. Look at Ethereum, same kind of thing. This also has a legitimate looking 2nd wave bounce. And again, that's on April 21st. And same setup here with Ethereum. We would have to see ourselves going through, officially 2302, but that's a long way down. What I would be looking for is us to break through our pivot structure. So that would be if we have a 1 and a 2 in place, we have to get through the 0.618 and the 0.764 extensions of the downside 1-2 setup. That is the pivot. So once we break through 2648, then we're probably going to be in free fall. Geronimo, watch out below. That's what we're seeing here. So going back to Dash, I mentioned April 21st was about where the bounce was for Bitcoin and Ethereum. And you can see that's more or less where the bounce was. And you see the same kind of thing across several other coins. Polkadot specifically, April 21st, we actually did get into the just at a 38.2% retrace before our downside. Chainlink, bit shallower than standard expectations. Stellar Lumens definitely had a clear 2nd wave bounce right in the box. And EOS probably had the most standard looking 2nd wave. We expect our 2nd wave bounce to be pretty sharp, and we saw that in EOS. So a lot of coins are pointing at us having more downside, but again, we don't invalidate the green bullish pattern until we actually see that follow through. So big picture in Dash, before I go to the big picture, small picture, assuming that is the 1-2 for the downside, we're looking in the upper 60s into the upper 50s range. So that would be about where we would target for a low. That does align with our big picture logarithmic chart, in which our low would be ideally about $61. That's where we'd be looking for. I didn't put a box here because there's a lot of equivalence here. There's a lot of confluence down below, especially when we take our 1-2 structure here for this C wave. This does look like a 1, 2, 3, and we've been in a fake out fourth wave rally for, well, a couple of months now, since end of January. And we have that fifth wave to finish us a bit lower down. So here it's pointing out about maybe 65, especially based on the extensions. We could hyperextend a little bit, but $61 is the point of confluence. And I would not expect this to go too much lower. So again, for you guys, if you're trying to protect yourselves, it might not hurt to take some coins off the table. For most of you, however, it is probably just going to be better to hold through the crash, because in cryptos, especially altcoins, whenever you have an ugly crash, you typically see a furious rebound in the other direction. When we look at our March 2020 crash, we were down to $33 on March of 2020. By April, exactly 1 month later, we were back up at $84. And by August, we were up at 106. And then the rest is history. So again, if you're not the kind of person who's going to stick to the trading monitors and watch every little move, it may be better just to hodl through this correction. And for others, you may be looking for a place to deploy some funds into cryptos. It is scary because we're falling, but the best time to buy is often when it's scary, when there's blood in the streets, as I think Warren Buffett says. So when and if we have this dip, that might be the time to just, put your blinders on, just throw that money in there, deploy it, and just, well, pretend you're never going to get it back. That's kind of how these high risk investments work. But as I always mentioned, if you like one coin, don't put everything in just one, buy a bunch, unless you're buying just Bitcoin or Ethereum, the OG cryptos, buy a bunch of different altcoins, 5, 6, 7, because you never know which ones will outperform. So I'm going to have plenty more updates. Subscribe so that you don't miss them as I go. And well, if you want to hedge, check out my video on using BITO, the BITO ETF, to hedge using put options if you're interested. So until next time, thank you for trading and happy hedging.